All right, good evening, everyone. So, welcome to this week's session over here. As usual, okay, we'll run through the markets, and of course, talk about opportunities available in the markets, some of the key ones to pay attention. And of course, if you guys have any questions, feel free to put it in. I'll be able to monitor the chat and answer and talk about them. If you have any requests for any particular analysis as well. Okay. So very quickly, I'll touch about the current trade. I would say more of like the active trades first, right? And of course, I think GBP USD here seems to be getting very close to our entry. We'll talk about that. So yeah, let me jump over to the pound on, right? Because this trade, I got out at break even, right? Price basically came back towards our entry point, and this trade basically exited at break even point. I'll talk a little bit about the kind of reason behind shifting stops to break even. I think some of you have been here for some time. You understand my logic, my thought process in shifting the stops. But for the benefit for everyone, some of you might be joining in at different stages. I thought it's a good opportunity to talk about when I shift stops to break even, or even potentially trail stops to profits as it goes, right? So the Power Australia, right? The logic behind this particular trade is that on a hard time frame, I'm seeing this as a potential ending diagonal, right? In a way, we have price actually coming down pretty impulsive initially, and then this starts to form more of like a crawl pattern, which indicate at least some form of a short-term potential bounce back towards a key level at 2.055. And that's where I'm looking at the buy side of things, right? So more of like a potential short-term reversal, or you can say a potential short-term pullback trade. So that was the overarching kind of a direction, right? And of course, on the lower time frame, on the H1, looking at the setups, we have this low getting broken. Price went up with a little bit of an impulsive move, and of course, we have like some fair gap over there, and then of course, then that becomes our entry point, right? What I was looking at, what I like about this entry point, it's the part where we have multiple lows here just below our entry, which can also serve as an internal liquidity, right? So that also kind of strengthen the setup itself. And of course, you can see, yesterday, this morning, we had that very nice little reaction, right? Where the price actually tagged it, and did move towards our target by more than 50%, right? In other words, when you follow the default kind of like entry, stops, and target, the average risk to reward ratio of our trades are always going to be 1:2. So when a price moves like 50% to our target, in what it means is also, the profit potential is at 1:1. In terms of the ratio towards our risk, right? Towards our stop loss point. So oftentimes I always highlight, that's actually a good opportunity to consider shifting stops to break even, because we don't technically want to see price coming back down after it has moved like 50% to our target, right? Ideally, we want price to just continue moving closer towards our target and hit it. So in this example, you can see, price really made that slightly more than 50%, and then it reverses back down pretty sharply. So situation like that, to be honest, I'm very happy to just get our break even, and then we just look for the next trade opportunity. The logic behind is because when we enter a trade, right, the ideal reaction is the price in a fairly short period of time start to move in our favor, and would never, really come back to our entry point, because if it does, then that actually decreases the probability of the trade eventually being a profitable one, right? Now, there are times where it does work out, but most often than not, you do not want to be involved in that trade anymore. At least from a focus point of view as well, right? Because there are better opportunities than I can look into, right? So that's a kind of like a typical trade management that I use. Obviously you can tweak it, you can fine tune it, but I just keep it very simple, right? When the trade moves more or less like 50% towards our risk reward ratio, I would say 50% to our target, which is a risk reward ratio of is about 1:1. Oftentimes it's a good indication to just shift stops to break even. If it comes back and tag us out, it is what it is, right? So this particular trade is just break even. Okay. Then of course you have the pound dollar, which actually came very close towards the entry, about 2 pips away, right? So I like to put my entry at a nice psychological number. So like the 67 pip is like 33907. I'll just put it at 3390, right? I feel that this one has a good chance that we might get tag in later tonight, maybe in the next hour or so. So let me talk a little bit about the pound dollar, right? So pound dollar is actually kind of a short-term buy. So if you look at it from a forward time frame perspective, why I'm looking at this particular buy is simply, price put in a high here and then came up pretty impulsive. So technically the overall arcing direction is still bearish. But after this impulsive push, we did see some meaningful kind of pullback, and then the price seems to be doing a little bit of a flag structure here, which from Elliott wave perspective is essentially what we call an impulse correction. And of course, the 618 FIB becomes a key level, and then we kind of expect a 3-wave expectation, right? Very, very simple projection towards this area at 1.3570, and then potentially price can, just make a move lower, and then that continuation to the downside. But in the near term, that's where it opens up the opportunity where we can look to trade this to the upside towards like 1.3570. And with that said, that's where then we go down to a lower time frame and look for our setup, right? Now this setup here, it's technically not like the most ideal setup because we are kind of lacking some sort of a liquidity sweat, right? Because if you kind of look at it, we do have this here, right, which is quite far of distance, but if we do have some sort of a smaller kind of double bottom structure there, that will be a little bit more ideal, right? But again, we are not looking for perfection, right? So it's again a combination of a couple of things, and then at the end of the day, are you convicted to the trade? How confident are you in the particular trade? So I'm not, again, looking at like 100% everything needs to fulfill or the perfect criteria being met, right? So sometimes, it comes a little bit with the intuition and experience. So to me, I kind of okay with this particular trade, right? I mean, if it doesn't work out, it doesn't work out. But I'm looking at a high time frame. I don't mind taking the risk to potentially make that profit potential, okay? Why I say that is because if today you look at this here, right, this setup essentially, if it tags us in our entry, and if it doesn't work out, yes, it's a 1% down. So basically what that means is I basically take 1% risk per trade, right? I mean, if you take 2%, then that's a 2R. Yeah, but if I take that, right, again, if a simple target here is a 1 to 2 on average, but if I'm gonna aim for 3570, I can actually push my risk reward ratio 3570 somewhere there, right? I can push my risk reward ratio to about 2.7, 2.6, which is great, right? And when I just balance that, yeah, it's essentially just something that I feel, okay, it's worth taking the risk as compared to the potential reward that I can get back, right? So it's a lot of balancing, right? You realize that like decisions in trading is essentially not just about it's not in a way where, is this correct or is this wrong, right? But it boils down to the simple fact that is this trade worth taking, right? In terms of like balancing between the risk, the potential reward, is this trade worth taking? What's the odds of it? Again, there's no certainty, there's no 100%, but it's all about managing that expectation, right? Once you are able to do that, manage your risk well, put in the risk management in place, then you can trade basically pretty calmly, okay? So that's my take on GBP USD, okay? So that's that, right? Then we have pound odd, kind of get our break even. We'll look at it when the opportunity comes again. And I think this is also opening up a very good opportunity to talk about this concept of risk exposure, right? Because in the email yesterday and today, I kind of put in that the pound dollar trade and Aussie dollar trade. Both are pretty similar. They are correlated in a way as well because of the dollar, because of its major pairs. And I mentioned about risk exposure, okay? So Aussie dollar is actually another potential setup here that I have an order, right? I have a pending order, and of course I'm interested to get involved in if it comes into our entry point. So on the high time frame, the overall analysis of Aussie dollar and the pound dollar is pretty much the same, right? So if you take a look at this, we have this push down and then the market bounce off. Seems to be doing a little bit of a corrective nature as a flag, impulse correction. We expect one more push up, so we are looking at capitalize on that move, right? So I'm more like looking at this as a short-term bounce, right? Of course, if you zoom out a little bit, can this actually make a move even higher potentially? But I feel that this can still come back down first, make a bigger flag before the push up, right? So to me, I'll just view this potential opportunity as more of a short-term push, right? And of course, that's where the setup comes in. You can argue that this is a little bit of a liquidity sweat, but I think to me it's a little bit too small, right? So I just ignore that fact. And basically, this entire setup is very, very similar to the pound dollar, right? It's not perfect condition, but it's something that I'm pretty comfortable in taking. So if this actually comes down towards the entry point, then obviously it's a buy, where the pound dollar is also a buy, right? So if you have like pound dollar buying it and then Aussie dollar, you're also looking at a buy. Essentially, you're selling the dollar twice, right? Because if you're kind of assessing it from a perspective where GBP USD you enter with one risk or 1 unit of risk, and Aussie dollar you enter at 1 unit of risk, then both same direction, you're essentially exposing your dollar position 2 times, right? And you need to be aware of it from a risk management perspective, okay? So if you're aware of it and you're comfortable with it, by all means, what this means also, of course, if you just do your standard risk, unit of risk into these 2 trades, then there is the opportunity where on the downside, concurrently you can actually lose 2 trades because if the dollar strengthens, and then there's a good chance this 2 trade might not work out. You might actually expose yourself in terms of like 2R, right? You're negative 2R. But of course, the upside here is if both trades work out perfectly, then obviously you're gonna, increase your profit potential exponentially too. So it's again a balancing thing, right? And that's what I meant by risk exposure, because oftentimes, one of the like surprise element that traders suddenly face was, hey, how come suddenly I lose two trades concurrently or consecutively, right? Where they don't understand that 2 trades are basically correlated, right? Which means you need to be aware that when you take trades that are correlated, you're essentially taking one trade idea, okay? So you need to understand that as well. Okay, so this is where I think it's a good opportunity to talk about it, since we have this chance, where we have like 2 trades set up, being valid. So I thought, just take some time to really talk a little bit about this. All right. Yeah. So I think so far so good in terms of like some of the traits that we're looking at, and some concepts here and there to talk about that. So great. Yeah. So I see Irene's here. Good evening. Yeah. Pound Aussie break even. Malu here as well. Pound Aussie break even. Yeah. So basically, we just look for the next opportunity, right? It's part of trading anyway. So great. Let's talk a little bit about the other instruments and what I might take on it. We'll start off with the dollar index, right? So dollar index over here, I'm expecting some sort of a bullish bias, right? But of course, if price can actually come back towards this key area here before the bounce, that would be even better, because then it will give us a very nice little 1, 2, 3 corrective pullback. Fantastic, right? And we'll look for our upside. So of course, then that would translate to the euro dollar. Okay, I mean, right now we don't really have an obvious kind of like setup, but again, if the market does use the opportunity to pull back correctively, that would be a very, very nice opportunity around the 1.1780, 1.1815, for us to look for a sell. Okay, I do see a question about prop firm and about live account, right? I'll talk a little bit about it after we go through the market. Okay, so that's my take on euro dollar. I think this week here, the primary focus will be very much, can we get that pullback towards the key area and then potentially look for a sell trade opportunity, right? Because if this comes back up and then within the key area, it gives you that setup, that will be pretty decent to look for a sell. Okay, GBP USD, Aussie dollar. I think we talked about that already, so we can have like go to the next one. Okay, dollar Canadian, right? So dollar Canadian here from an Elliott wave perspective, I'm looking at it from the perspective where we have this as a swing low, and then 1, 2, 3, 4, 5. Potentially, the internal 5 wave has been completed. Price did break above that high as well, so I think the pullback would likely be the next development. And for that very reason, I'm going to be patient for now, or even potentially look for a short-term sell. From a higher time frame perspective, if this comes down impulsively, take out this low, then you have the standard setup, right? Liquidity sweep. If this comes down impulsively, this will be break of structure with some fabric gap there. Of course, the pullback will give you the opportunity to sell it on the third wave. So that will be what I'll be looking for in the near term if we can get an impulsive move to the downside, right? So I'm keeping track on this. Based on time projection, the earliest possible a setup would really establish on this is probably going to be end of the week or maybe going into early next week, right? So you need time for it to develop a little bit. Yen pairs, right? So dollar yen, pound yen, odd yen. The momentum right now is definitely impulsive to the upside, right? We have a weekend gap opening as well. So most of the yen pairs, to be very honest, this week unlikely we're gonna get anything, right? Just based on the approach and the setup that we use to trade and engage in the market, the yen pairs will unlikely give us anything within the week itself, right? Because we just end off. I mean, it's not even ended, right? Because you can see price on dollar yen is still pushing higher here. So the impulse move is still basically in development, and you don't want to be getting involved at the top, right? You don't want to be buying at the very, very top, because then your stop loss has no reference point, and the risk reward ratio is just gonna make sense. Okay, so I would just skip through the yen pairs, right? To be honest, this week there isn't much that we can't really talk about it, right? You just want to be patient and then wait for price to develop the pullback first. Gold and silver essentially both are also extending higher, which is great, right? I mean, it's getting very, very close to the 4,000 mark, which is all-time high for gold. Fantastic, right? I mean, if you are trading it, you might not be in any position, but if you have been following some of my sharings, I mean, as long as, like, if you stretch it back last year, I've been sharing that gold is definitely a buy, in an overarching bigger direction perspective. And obviously you don't want to be, if you want to hold for long term, you wouldn't be buying into XAU, right? As a CFD, you'll be buying into maybe GLD as an ETF, because then you won't have that overnight fee, right? Yeah, so I do have positions on that as well, and then this is just great, right? Because if it just keeps extending higher, then the GLD position would naturally also benefit from this, right? So what's the take here for gold and silver this week is very, very going to be very, very similar to the yen pairs. My suggestion here is just be patient, stay put, wait for price to pull back before you jump in, right? Because the logic is just very, very simple. If you're gonna put in a buy at the top, where would be a sensible stop loss, right? Doesn't matter, because if today you're buying at the top, right, your next sensible stop loss is gonna be here. You can see that the risk reward is just not gonna be worthwhile, right? So again, the balancing decision comes in, right? Is this trade worth taking? Probably not. Okay, if you're gonna be buying at the very, very top, okay. What would be more sensible is, of course, after price pullback, you get in a better price point, your risk reward can extend and increases significantly, right? So gold and silver, to be honest, there's really nothing much this week. Very, very similar to the yen pairs, okay? Then we have crude oil, okay? Crude oil had a nice break out of the previous low structure, right? So obviously right now we're waiting for the corrective pullback as a form of confirmation that price would likely hit lower after this. So the key level right now here is going to be around the 63.4, which is where the 50% mark was. Just extend this to 61. That will be essentially the area of interest, right? POI, or key area. So if price can actually pull back towards that zone, we might potentially look out for a sell trade setup. Okay. So again, this would take a little bit of a while. this would take a little bit of time because price is just starting this phase, right? Usually it takes a little bit while price to complete that 3-wave corrective pullback. Okay, so be patient. S&P very similar to gold, silver, and of course the yen pairs this week is continuing to push higher. Just be patient, wait for the pullback, right? Don't rush things through. Okay, so yen pairs, I'm just gonna skip it. I think this week there's really nothing much to talk about it. Pound Australia, we did mention on that, and then lastly here is a little bit in the crypto side, BTC. Okay, so Bitcoin here, I would say, in a way, we are gonna be bullish bias, but I think short term, depending on how aggressive you are, we may get a short term sell. Right? I mean, if you're more of a longer term perspective, it means you're only interested in buy, then you just wait for the pullback, then you get involved in the buy. If you're interested in trading it short term, there might be a sell side coming in. If you take a look at this from a crawl perspective, right, you want this to come down impulsive, do a corrective pullback. This is your opportunity to sell. Right, then of course you got your liquidity sweeps, you got to change the corrector, break the structure, and of course, setup comes in. If you're interested in, if you're interested more on the longer term, then just wait for this to complete, and then you look for the buy here. Okay, so depending on how you want to approach crypto, because again, there are really two big difference between trading crypto in the short term because it's very volatile, and then of course looking at like building a position, from the longer term perspective. Okay. Yeah, so that's my take on the Bitcoin side of things. Okay, so this week, as of today, pound is done. So we are looking at primarily these two pairs, and then of course, a little bit on like depending on how other pairs are gonna develop as we progress from today. Okay, so there are definitely some things that we can keep an eye on. Some of it is as close as maybe by tonight, but tomorrow morning we might potentially get involved in it. And then some of it might need to wait until like Friday, as I mentioned. Good. Okay, so let's discuss a little bit about what Malu has posted up over here, right? How much risk taking on prop firm challenge account? Any difference on live also, right? Very good question, because I think in the recent times the popularity for prop firm has increased quite a bit, right? And of course, that also opens up the part where if one thing is popular, then there will be more and more potential, I would say, potential scams coming into the market as well, because when there's high demand, and then that opens up opportunities, right? So what is the risk? Okay, I would say the main risk on prop firm is essentially just, assuming the part where you can pass the evaluation, you can pass the verification of whatever challenges that this prop firm has, and then you're basically trading the actual account, right, where everything is live in a way where when you make profit, you actually get a profit share. Okay, so assuming you reach that stage, then the rest of it is essentially just the prop firm doesn't pay you your profit share. Okay, so the main risk is really just that, and of course, that carries the part where you spend some time to build up that verification, that you go through the motion, right? So time is being invested. So that's one way to look at it, right? Opportunity cost, which is your time and your effort, and then the other one is obviously the cost that you use to purchase the account. All right. Essentially, those are the two costs or the two risks for prop trade, right? Because you don't put in, your actual money. You don't fund the account other than just purchasing the account once, and that's kind of like a fixed cost anyway, because you know upfront, what you're paying for. Yeah. So to me, relatively, prop firm is actually a very low risk kind of approach. Okay. Again, the assumption, as I mentioned, just to remind everyone, is that you're not buying the prop firm to gamble, right? You're not buying the prop firm to flip account. You're basically given the assumption that you manage it properly, you treat it with proper risk management, and you're able to pass all the verification and challenges So the risk is obviously then your time, your effort, and of course the money that you use to buy the account. All right. The difference between live is basically, I'm assuming here, live here is referring to your own individual account, right? And obviously, the biggest difference is prop firm, you pay and buy an account, which is relatively lower to gain access to a bigger fund size. Whereas if you are trading in your own account, then obviously, depending on how much capital pump in, then that's the amount that you're trading. Okay. Yeah, so that's really the difference, right? That's the main take for prop firm. Okay, Steven here has a question on, I mean, not question, but has a request here on the dollar Swiss franc. So let's take a very, very quick look at that. Great. Okay, I think this is pretty clear cut. I think very, very similar to some of the major pairs, right? Essentially, we are looking at something like this. Okay, so again, if you take Fips in, right, 50 and 618 would obviously be the key area of interest, right? Yeah, so if I were to just do a very, very quick analysis on dollar franc, that will be the take, right? So your key area here is going to be like 7920 to 0.79. Okay, if price can continue to pull back correctively, that's an area that you can keep an eye on. And of course, that also potentially means you might get a nice little liquidity sweep from a previous swing low. Right, and then you look for an upside from here. Okay, so that's on the dollar franc. Okay, then we have Dio here asking about the dollar Mexican. Okay, so let's take a look. I think this one I can go a little bit higher. Seems like there is a little bit more downside, okay, that we can look into. So on the 4-hour time frame, we are looking at the possibility of a channel here. Okay, there's a possibility of a channel structure. Okay, but just bear in mind, dollar Mexican, doesn't really, based on my observation, doesn't really carry a very nice kind of like, it doesn't really follow very nicely from an Elliott wave perspective of patterns, right? Which means while we are expecting a 3-wave move here, it might just comes out here and then just drop, right? So then that would develop more like into a contracting flat. Yeah, but I mean, in trading, you can't have too many. In terms of your analysis and in terms of your kind of forecast, you always forecast the simplest structure, right? Which in this case here will be a simple WXY 3-way structure. So your key area, if you stretch it, of course, there's some confluence as well, would be around the 18.6, right? So that would be definitely your point of interest if price can actually go towards that zone. That's where you can look for potential sell, right? You can definitely look for potential sell, right? Because you can see this impulsive push down breaks that lows. Okay. Yeah, so that's my take on the dollar Mexican. Okay. Then we have another request on the Aussie Canadian. Right, Aussie Canadian is pretty straightforward for me. I would see this as more of a potential liquidity sweep or double top structure. We do have this as a crawl here as well, so I think there's a very good possibility price would come down. And your target for this short-term bearish expectation would be where that previous swing low is, which is going to be 0.97. 0.9070, right? So that will be the expectation. So I say short-term here, you can definitely look for sell trade setup with a target in mind, which is 0.9075, right? Which is where the swing low is. Okay, very, very clean, very simple structure. Novell here asked about the Euro Canadian. Let's take a look at that. Pretty similar as well. This was something we've done in the past. Yeah, so this one here, just to update it a little bit. Seems like this is still very much a crawlish development. So if you ask me here, I'm still more inclined to potentially look up for a sell. Okay. But of course, ideally, you want to see an impulsive move to the downside first, right? I think very, very similar to Odd Cat. Okay. what would be a nice impulsive confirmation is obviously price breaking below this internal lows, right? That's why you can see this extension of a drawing here. We want this to be impulsive down, then the pullback gives you an opportunity. Same thing here in Euro Canadian, right? You want price to take out this structured swing low with momentum, and then of course that pullback would then give you the opportunity to sell it, right? And this would provide some sort of like channel structure. Okay? So yeah, pretty straightforward in terms of the structure development and of course the general directional bias, right? The key, of course, is to wait for the setup conditions to be fulfilled, and then only you get involved in a trade, right? Because if it doesn't, then obviously no trade. Cool. Great. So managed to cover quite a bit. Any other things that you'd like me to talk about? Oh, good. Cool. Yeah. So generally, I don't see any other questions. Hopefully, it's clear. And of course, it provides you with some insights into the week. What are some things to look out for? Okay. And what are some things that you can prepare? Okay. I'm not sure if pound dollar actually tagged. Not yet. Okay. Yeah. So we did mention a couple of potential opportunities, so keep an eye on those. And of course, some of those are some of the other opportunities are also potentially developing throughout the week, so you can definitely have it in your watch list too. Okay, so yeah, if there's nothing else, then generally that's all that I have for today's session over here. Okay, one last one I see is from Dio about euro pound. Okay, probably not the cleanest of all. Yeah, this will probably need to have a little bit of a zoom out take because on the lower time frame it's not one of the cleaner ones. But I would say you can see this is a very, very similar pattern, structure development, right? Double top potentially. And then of course you can look up for sell trade opportunity towards where that swing low is. Very, very similar to the odd cat on the 4-hour structure. And you can see that similarity, right? Though different time frame, but kind of similar pattern structure here. Okay, so that's my take on euro pound. The key area is somewhere around 86.05, right? 86.05. Okay. Another one request I see is euro yen and dollar franc. Yen pairs, to be very honest, there's really nothing there because the market just impulse up, gap up this week. So this week, all the yen pairs, you potentially just leave it aside and you don't want to touch it until next week. Okay. I think dollar franc we did cover slightly earlier as well, where we're looking at this. Okay. Potentially, if price can pull back towards the key area around 7920 or 0.79, which of course can coincide very nicely with that liquidity sweep from a previous swing low, then that would be the area to look for buy trade opportunity. Okay, then that would be a simple expectation of a true wave development. Good. Cool. So I hope it's clear. Okay. All the best for the week. Okay. We'll see how things move forward from here for the week itself. And for those of you who are in the email list, yeah, I'll update you on a regular basis as I mentioned. Good. So that's all the best for this week, and we will see you guys in the next session. Okay. Good night.